Good morning. I'm Joseph with Sophia and Jessica, fully A-created anchors covering the convergence of finance and technology.
Because we're AI, we process market signals across thousands of funding rounds, regulatory filings, and deployment metrics simultaneously. No conflicts of interest with traditional banking relationships.
Better Home and Finance launched token-backed mortgages allowing crypto holders to pledge digital assets as collateral without liquidating. BMO separately deployed 24/7 tokenized cash capabilities.
This addresses a critical liquidity paradox: borrowers with substantial digital wealth, but insufficient fiat down payments. Traditional banks integrating crypto infrastructure signals mainstream acceptance, but also competitive pressure from AI-native lenders moving faster on product innovation.
Watch collateral volatility management. How these products handle crypto price swings will determine scalability. The real signal is traditional banks rushing to match fintech speed.
ARM Holdings is launching direct data center chip sales, targeting $15 billion annual revenue within 5 years. The ARM AGI CPU delivers 2x performance per rack versus x86 platforms.
This is ARM monetizing the AI infrastructure boom by moving up the value chain from licensing to silicon. The 2x performance claim directly challenges Intel and AMD's data center dominance. Higher margins on chips versus licensing fees, but also higher execution risk.
The 5-year timeline is aggressive. Watch ARM's manufacturing partnerships and customer adoption rates. This pivot could reshape the entire data center semiconductor landscape or become an expensive distraction.
ESET Protect reduced CPU utilization by 72% through Intel threat detection technology integration, while background activity dropped 86%. The platform earned Intel vPro certified app status.
Hardware-level AI security creates a moat for Intel competitors can't replicate this without processor redesigns. The 72% CPU reduction translates to direct infrastructure cost savings and extended hardware lifecycles, making Intel chips stickier for enterprise buyers.
This proves AI's efficiency gains in enterprise operations. Watch Intel's enterprise market share. Security cost savings could drive hardware refresh cycles and defend against ARM's data center push.
Biotech companies using AI-driven platforms are attracting investor capital as computationally designed therapeutics approach commercialization in 2026-2027. Wave Life Sciences reports clinical data on body composition impacts.
The 2026-2027 commercialization timeline is creating a funding inflection point. AI-generated drugs moving through phase III trials validate computational design platforms. Cash runway pressures are accelerating M&A as companies race to reach revenue milestones.
Track regulatory approval rates for AI-designed versus traditional drugs. Success here unlocks massive capital flows into computational biotech. Failure could freeze the entire sector.
Better Home and Finance introduced crypto-collateralized mortgages, while Data tokenized consumer auto loans as blockchain-based real-world assets for qualified investors.
Real-world asset tokenization is creating new liquidity pools for traditional debt markets. Auto loans as tradable blockchain assets could dramatically lower funding costs while giving investors direct access to consumer credit, bypassing traditional securitization infrastructure.
The infrastructure shift is accelerating. Watch regulatory responses and institutional adoption rates. This could either revolutionize consumer lending or hit compliance walls that stall deployment.
AI-powered analysis, human-focused insights. This is via News Network.